Two Bulls in a China Shop is brought to you in part by our sponsors and friends over at Manscaped, Trade Pro Academy, and Vanta Trading. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, and with a new and improved 2.0 version of the Weed Whacker now available, it's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. And when it comes to institutional quality trading education, look no further than TradeProAcademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for anyone trading futures, check out VantaTrading.com. Founded by Mr. W. Banks and Baba Yaga, they provide a ton of educational content with the focus of teaching aspiring traders how to build a repeatable, profitable process. Our exclusive discount code for Vanta can also be found in our free Discord server. We'll have all of those links and more in the episode description. Thank you for listening, and I hope you enjoyed today's conversation.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello,
Nailed it.
Hello, everyone. No? Okay. All right. It's safe. All right. Hello, everyone, and welcome to the China Shop. I'm your host, Kyle, and joining me for today's midweek update is Erik from ES Invests. How you doing today, Erik?
Stellar.
No interjections or penises you want to drop in at the beginning of my intro?
I don't know what you're talking about.
Yeah. Now that I'm finally ready for it. Such a dick. What's been new, man? What have you been up to?
Disgraced Theranos CEO Elizabeth Holmes will remain free through the Memorial Day weekend before surrendering to authorities on May 30 to begin her more than 11-year prison sentence for defrauding investors in a blood testing scam. This is from Bar Chart. And I relish in the fact that she has another 15 days of freedom. Could you imagine how awful of a Memorial Day weekend that's going to be?
Especially when you just had a kid for that trial too.
Oh, it's just it's all so sweet.
I've never been happier to see somebody go to prison than Elizabeth Holmes.
Yeah, she's just so fucked. But could you imagine if you were in her shoes right now and you're like, on the 30th of May, in 13 days, I'm going to jail for 11 fucking years.
I don't understand why people just say, okay, I'll go to prison rather than at least, I don't know, I think I'd probably try to go live in Ecuador or something. Is it that hard to do it?
I don't know. I feel like it's probably not, but I mean, all of the asset, you essentially would have to start from zero, which may or may not be okay for some people. But
I guess there's probably a timeline, right? 11 years, I think it's worth starting over from scratch.
Yeah. Well, also in your advanced age, I could see that, but it's
oh, thank you.
Yeah, it's I don't know. It's like it's a tricky one. It's a tricky scenario. Because the other thing I think about is you essentially spend the rest of your life as a fugitive, as a known fugitive, which
right.
Yeah, I feel like that just limits a lot of things. So I don't know. Who knows? Real tricky.
Yeah, I mean, I'd at least give it a try, right?
Yeah, well, we're just gonna have to worry about her 1-year-old son William and 3-month-old daughter Invicta. There's nothing like having a daughter right before you go to jail.
I know. I don't understand that thought process at all. I guess do it while you can.
It's almost like it's a coincidence.
Yeah, right. Almost like she didn't think they'd send her to jail as a mother.
Well, she did win a reprieve because she was supposed to start on 27 April. It looks like she got an extra month.
Month well spent.
You hate to see it.
And that's going to be a terrible, terrible barbecue party, right?
Oh my God. Could you imagine trying to do anything?
Oh, I hope they live stream it.
Or Memorial Day week. Hey, do you want to have some family over? No, I'm going to jail on fucking Tuesday.
No, I want to do as much blow as I can get my hands on. What? All right, so that's your big story. Anything else in the news worth talking about?
I'm still reading this article, to be honest with you.
They sound just like Dan.
It goes even further. It says the father of both children is Willie Billy Evans,
Oh, that's an awesome name.
whom she met after breaking up with her former romantic and business partner, Ramesh Sunny Balwani, who began serving a nearly 13-year prison sentence last month.
Did you watch
He's,
the documentary on this?
I did, yeah.
That's so good. It was so good.
Balwani is 57 and convicted for 12 felony counts of fraud and conspiracy while he was Theranos' COO, which
Right.
and living with Holmes. That's actually kind of
Mhm.
really curious how she has an 11-year prison sentence as the CEO, but the COO got 13 years.
I wonder if it has to do with age and experience. Because wasn't he more he definitely had more credentials than she did. Like maybe they
She's a
just
fucking
thought that
boss,
she should
man.
know better.
Well,
Or he should know
apparently
better.
the military has a different approach to leadership and responsibility than the rest of the world because the boss is the boss, dog.
I know, right?
You get to delegate authority, not responsibility.
Yep. Well, that's most of the jobs I've had are the same way.
It's
Like,
almost like it would make sense.
yeah, yeah, like it's like the way that was structured.
Man. Well,
Ah,
anyways, this is just a juicy story. I'll make sure to throw it in here for you guys to be able to soak it up in all of its glory
yeah, that's
because
delicious Schadenfreude.
just fuck her.
What else is going on though? What anything new with the debt ceiling? I saw that there were some talks going on, but I didn't see if they had reached any conclusions. I did see Jamie Dimon up on the mic again, warning of doom and gloom.
Yeah, he's kind of been on that, hasn't he?
Yeah, like any chance he gets, it seems like. I don't know. Wonder what he's playing at. What's his game?
I know it's kind of an interesting because I definitely noticed it on Twitter too, where there's like more political. It's not all political, right? He's obviously taking an experience based perspective on it, but it's definitely weighing in on a lot of political stuff.
Right. Yeah. Does he have aspirations after he finishes CEO? Maybe does he want to get into politics? Has anyone ever done that?
Kind of would make sense, wouldn't it? I think Trump did, didn't he?
Yeah, I guess. Although he kind of more followed the Ronald Reagan path, didn't he? the
Yeah.
famous actor.
But yeah, it looks like today we got a pretty significant rally out of the S&P 500. Obviously, typically for a few reasons, it's rarely one simple narrative, but
Right.
there was a lot of conversation about the debt ceiling negotiations essentially going.
Hmm.
But I continue to think that the debt ceiling is just this is a good cycle for traders to follow. I'm really into trying to identify periods of time that I think traders should pay very close attention to how the market behaves because it offers great precedent for other
Hmm.
instances. Because guess what? This debt ceiling bullshit isn't novel. It was
No.
happening when I was on active duty. I remember the conversations about this shit.
Hmm.
So I actually started analyzing how the markets behave around the debt ceiling negotiations. And there's always other inputs, but there still are prevailing trends that I think people can extract from the scenarios. So
Hmm.
that's really the main point I think in terms of talking about the debt ceiling bullshit is it's always a political event. They're going to use the event in an attempt to try to pass other shit
Right.
that they want in other bills. And then sooner or later, it comes down to who's going to blink first. And then it almost always gets approved or extended in some way.
Yep. Yep.
So it's almost like a playbook at this point.
I know. It's brinksmanship at its finest.
Yeah. It's all just fake bullshit. That's what kills me. Even the debt ceiling itself. Like,
Hmm.
what I don't understand is if we know our debt is a certain amount, why don't we just raise it? And because if we're gonna raise it, why don't we just raise it a meaningful amount so that we don't have to play this game as much? Like I really don't. I'm sure there's a reason. I just don't know what it is.
Well, it would make sense that if you've already approved a budget, that the budget and the debt ceiling should probably line up, or is that just all the overages from their budget?
Which is a great question. Like that's a great point. And to me, it seems like you know the general run rate of these
Right.
things. So yeah, that's there's more gamesmanship behind it that I'm unaware of. But it confuses me because again, it seems like there's a simpler solution here, but with stuff like this, there generally is more than meets the eye.
What are some of the other events that you think traders should specifically like zero in on and study?
Yeah, well, it's a lot of it is going to be periodic, right? So I
Hmm.
think all of the FOMC announcements have been really interesting. I think the bear market that we went through was really interesting in conjunction with the stimulus. I think the bear market last year,
Hmm.
like when we look at market conditions, I think it's important for people to realize how novel some of these things are. And it's one of the few times where you actually have the ability to learn real time how stuff behaves. Because essentially, if we take a look at 1990, if you look at 1990 on,
Hmm.
there have been 5 bear markets. I guess if we count 2022, it would be 6 now. I think my data here goes up into 2020.
Okay.
But the point being, that's from 1990 essentially until 2020. So the there aren't a lot of occurrences for a lot of these circumstances. So I think by paying attention to the higher impact things, it gives you a better idea of how markets behave in anomalous circumstances for the next time you see it.
Yeah. No, that makes a lot of sense. Sorry, I'm just looking at the SPY chart from all available data on a weekly just to see what you're saying.
Mm. Mhm.
Like, there's something different to watching it in real time than trying to go back and listen to the history of it too, right? Because it feels like you're trying to reconstruct a lot of things, and you got like knowing the outcome too. I think kind of really clouds your ability to fully be able to understand and interpret what you're seeing in real time.
Exactly. And I think from a trader perspective, what I do in circumstances like this is I'm paper trading a lot.
Hmm.
I was talking about this yesterday, but across like all of the variations of the different strategies that I'm using, I have close to 2000 paper trades on right now.
Interesting.
And it's because it allows me to track real time data of near unlimited permutations of existing strategies. It's complete overkill, to be clear.
Right.
You don't have to do that. Part of it is just because I genuinely am curious.
Hmm.
But the main note there is that you can use interesting, rare market occurrences to better understand how you deploy. And this is when people ask me, like, oh, well, why do you do this way? Or how did you arrive at this conclusion? And a lot of it is from shit like this,
Hmm.
from seeing how the markets reacted in these kind of circumstances and then learning what works best. Because even me, I've been trading since 2007. But if you look at that time span, there's not that many bear markets. From 2007 essentially until 2022, there's 4 bear markets.
Yeah. Yep.
It's not a lot. So you kind of have to maximize the experience of those instances so that you're equipped the next time they roll around. Because I say this all the time. Ideally, trading is a very long term endeavor. I'm
Hmm.
32 right now, and I hope to be trading for ideally another 50, 60 years. So
Right.
getting the right details and extracting as much information, real experience from the events is very useful.
If you haven't heard by now, Manscaped now sells beard products. That's right, once again revolutionizing men's grooming with the brand new Beard Hedger Pro Kit. From a beard trim to a fresh shave, the technology behind the Beard Hedger Pro Kit allows you to shape your signature beard look. Now you can finally use Manscaped products to make your drapes match your carpet by going to manscaped.com and using code 2bulls for 20% off and free shipping. God damn, I was going to make that joke. Our friends over at Manscaped were kind enough to send me the Beard Hedger Pro Kit, and I gotta say, I was impressed with the quality and performance of the products. My thick, coarse beard hair has been giving me trouble with trimmers in the past, but the Beard Hedger was able to cut through the thicket without any tugging or discomfort at all. And because the trimmer has one rotary wheel with 20 length settings with only one guard, I don't have to worry about losing or breaking attachments anymore. So I've tamed my mane, and now you can too. No one likes a weird beard, so say goodbye to your stubble trouble with Manscaped's Pro Beard Kit. It all starts with that beard hedger that I mentioned. The thing's a juggernaut of fixing faces. Not only does it have the trimmer with the rotary wheel that gives you the 20 hair cutting lengths of just the one guard, it's also waterproof so you can shave in the shower and avoid all the hair in the sink. The titanium coated T-blade is tough on hair but smooth on your face, leading to a single stroke efficiency that brings satisfaction one stroke at a time. Phrasing. The Pro Kit doesn't end there, though. They also created 4 dermatologist-tested formulations for your post-trim care. First is the Beard Shampoo and Conditioner. Gotta remember that all your hair is different. Beard hair, as I mentioned, is more coarse and easier to damage than the hair on your head, if you have hair on your head. That's why the kit has made shampoo and conditioner specially designed to moisturize, reduce ingrown hairs, replace natural oils, and promote beard health. Next, the kit has Manscaped's Beard Oil, an essential piece for your main facial accessory. No one wants a guy whose beard is brittle and dry. The oil relieves dryness both on the beard and the skin beneath while adding a little shimmer and shine, which makes you look extra fine. Cap off the kit with the Beard Balm, a pomade that shapes, styles, moisturizes, and tames for a sculpted look to attract any fellows or dames. The Pro Beard Kit also comes with 3 free gifts: beard brush, comb, and scissors to ensure your beard is ready to impress. So get 20% off and free shipping with code 2bulls at manscaped.com. Of course, that's the number 2. That's 20% off with free shipping at manscaped.com using code 2bulls. Manscaped Beard Hedger, 1 stroke, 1 guard, 20 lengths.
Growing a business can feel like the Wild West, but there's a better CRM in town, HubSpot. HubSpot CRM keeps all your teams on the same page, so you can spend less time managing your software and more time connecting with your customers. Learn more at HubSpot.com. HubSpot. Grow better.
Well, you mentioned paper trades, and we still got some unfinished business from last week's discussion.
Mm-hmm. Talk to me.
So you sent me some videos to watch to learn about cash-secured puts. I watched them. You sent me the new one, but I actually went back and through your history, and I found the older one that you did that was broken up into 3 parts. And I actually like that version better.
Do you mean cash secured puts or the covered strangle?
The cash-secured puts.
Okay.
Oh, I'm sorry. Well, yeah, it was the the covered strangle. Sorry, yes, that was the strategy. That was I was thinking of the first leg of it.
Nice job out of you.
Yeah, I really enjoyed the original videos that you did, though. I thought there was a lot more detail and nuance in that one.
Interesting. Yeah.
That you kind of because when you redid it, I think you were summing it up a little bit more, but you really got into like the nuts and bolts of the other one, and I can see the appeal to different people. Some people would enjoy the newer one. Some people might enjoy the older one.
That's actually, yeah, it's good feedback because I'm in the process of redoing some of those videos anyways with like the new editor.
Yeah.
And like lining out the level of detail to me is typically it's a struggle, right? Because the more in depth I go, the higher fallout rate I have from people who's just like, oh shit, fuck this.
Right.
And then they just bail. But I also feel like it starts doing a disservice to the people that actually want the details. So
yeah, and maybe just keep them both, right? Anyway.
Yeah, and I think that's fair.
So I went through all that, and I took a shitload of notes. I've got like 2 or 3 pages filled up here. I went in to try to start putting some of this to use by doing some paper trading. So I started with FinViz, and I set some screeners up with the following filters. I had dividend yield above 3%. I wanted price above the 50 and 200 days simple moving averages. I wanted average volume over 1 million. And I threw on insider transactions as positive just because I thought that might be another good, indicator that long term this should be a stock that I'd feel comfortable holding if I were to get it signed. I got 6 results out of that, 5 or 6. Let's see. The first one was ED. The underlying was too expensive for the balance that I started myself with. FLO was a good trend, but I didn't like where it was, and the contracts were way too illiquid once I pulled them up on Thinkorswim. Same thing with FTAI and ORI. Then I pulled up 2 other stocks that I knew that I like that I do actually hold, thinking like, okay, maybe these might be some good candidates. One of them was Enterprise Product EPD. I can't remember the name of the thing, but it's like a pipeline stock. Very low volatility, not worth messing with. So I disqualified that one. Then I came to British Petroleum, which has a really good dividend. I liked where it was price-wise. I had 2 support levels that I could...
Why did you disqualify EPD?
Because trying to sell any options off of that there's nothing to make on it. It didn't seem like it was worth it.
Okay. Yeah, because I'm taking a look at it and I generally agree with you. I see on like a 22 Delta 37 days out, you collect like 19 cents on a $25 strike. So I wouldn't consider that awful, but it's Yeah.
it didn't seem worth it.
Yeah, you're not going to make a bunch of money on that part, but just a quick admin note. This is the kind of stock that if you like the stock, what you can do is instead of legging in via cash secured puts until you're assigned, you could always start
Just buy
buying
it.
long shares and selling cash secured puts at the same time.
Okay, that makes sense.
Yeah, exactly. So we don't have to go super far into that scenario here, but just an idea, because as I look at it, I agree with you. Like, this looks decent to me. I don't know the details on it, but it looks decent to me.
It's one of my favorite stocks. It's paid a
Mhm.
great dividend. The only downside is you have to fill out a K9 or K1 form every year, which adds to your tax bill. So British Petroleum was the one that I ultimately came to, and I think I went with. I had a really nice support at $34, where I would see that as my entry point. So those were the contracts I was looking at. I also had a nice second support at if that 34 failed, I could redeploy more capital at about $25 a share to be able to average down that entry price, so I'd still be able to sell calls on it, because I think that was one of the key, that was actually the key component I was missing with the wheel strategy, because I actually was leaning into that about 2 years ago pretty heavily until I had a scenario like you mentioned there, where the stock drops so much that you can't sell anything anywhere near your entry price, and
Uh-huh.
then you're just stuck holding a stock that's underwater by a shitload of money.
Always a great time.
Yeah, yeah.
Highly recommended.
So I really like the way that I had the two price points where I've got points where I could deploy my capital, but and it also fit. I gave myself a $10,000 paper trading account, so I could have up to 3 contracts based on the amount of money that would cost me to purchase the shares, right?
Mhm.
But if I wanted to keep reserve, I could only do one of them, right?
What do you mean keep reserve?
If I
You
want to
mean
keep reserve capital in case the price does lose that support and I need to be able to deploy more of it, I have to keep that on the sidelines ready to go, right?
Um, I mean, I wouldn't, but you. So here's the short answer.
Yeah.
In that scenario, let's say we're giving $10,000 to BP. Does
Hmm.
that mean that as we put the trades on, that we have to have $10,000 always sitting there only for BP? The safe answer is yes. What I do definitely is not. What I do is I earmark money. So
Okay.
if I chose to use that money elsewhere, I know that ultimately it's allocated to this trade. So I'm going to time other trades and other opportunities effectively to make sure that I can still put the money in the BP trade when it comes time. This is back when I had a small account, and you have to be thrifty. Otherwise, you're just going to get eaten alive. Whereas
Right.
what I do now typically is the money I have set aside, at least today, with rates where they're at, I just put it in a box spread so that I'm
Hmm.
earning the risk free rate and the money is still generally available. So the short answer is ideally yes, but there are concessions that have to be made in small accounts, and that is one that I would regularly make.
Okay. No, that makes sense. And that was one of my main questions of doing the paper trading process on this. So the strike that I ended up picking was the $34 puts that expired June 23rd. At the time, they had a 28 delta, I think, and they were selling for 60 cents. So that was the other question: is the risk versus return there? So this was selling one contract would tie up $3,400 worth of capital, right? Or that's what would need to
Mhm.
be earmarked against that
Mhm.
for $60 return essentially on one contract. Like, what's the
Mhm.
actual return on that? It's like a percent, right?
Mhm.
Does that sound reasonable or in line,
Yeah.
or is that
Yeah. What was the date's expiration on it?
June 23rd? June
Okay,
23rd, and
7
I
days.
think they're
Yeah.
trading
I
at
mean,
40 cents right now.
it's a little low, but that's not like crazy low.
Yeah, and like I said, I would have tried to pick a better one, but I kind of purposely handcuffed myself with a smaller paper trading account balance because
Really? I mean,
I, I
because
wanted to I wanted to be something reasonable with what I'd be starting out in, because I'm not the type of person who deploys everything and goes 110% before I know what I'm doing.
sure, sure. And that makes total sense. But there's a lot of decent products that still fall below $30. Because to be honest,
Hmm.
like as I look at BP, that's not what I would trade. That's for sure.
No? Okay.
No.
What do you see about it that you don't like, or what can I learn from
It's
that?
a few things. So if I look at a 6 month daily, it attempted to breach above 41. fell below.
Mm-hmm.
It got, and this is back in February. Then in March, it fell to the low 34s. It rallied back up to like 40 and change, didn't even get to 41, and then has since fallen back down. It had not a great reaction to earnings. Now, the way that I look at this is it's kind of at an inflection point
Mm-hmm.
where, to your
Yes.
point, I do see that same kind of resistance zone. I'm using a 150-day or a 200-day simple moving average that's plotted at $35.40,
Okay.
and it's essentially hovering right on that. So
Okay.
it could absolutely rebound off of this and start rallying up and out, which is good. But on a 6-month chart, the linear regression channels are positively sloping, which is good, but we're at like a -2 linear regression, which is a big move down. But then on a 3-month daily, the linear regression channels are sloping down, which is no good.
Okay.
And then if I look out slightly closer and we do just like a 1 month, whatever aggregation, it's like plummeting down. So
Interesting.
in the shorter time frame, I don't like how much it's contracting. In the longer term time frames, it doesn't look awful to me. So this is the kind of thing that I would wait. I would wait and
Mm-hmm.
see, because the moving averages are all inverting right now. So 50 is above the 22, which is above the 9. Those are essentially all inverted. The only one that's in the correct spot is the super long term, the 200-day. So because this
Interesting.
trade has short-term legs, I would want to see short-term support as well as long-term.
Okay. That makes sense. Yeah, now that I'm looking at this too, if I loaded it up on a weekly and then suddenly it looked a lot worse than it did on the daily chart.
But you bring up a good point, because when we're trading something like the coverage triangle, we're trading multiple time frames. We have a
Mm-hmm.
long-term thesis against short-term trades. So the long-term thesis is super important, but we still need the short-term stuff to make sense as well. Otherwise, the trade itself starts to not look super attractive, in my opinion.
Right. Well, one of the other factors that I would think that led me to this trade, or to go ahead and pull the trigger on it, had to do with the summer coming up, the summer months, and the oil, I think, historically rises during that period, especially as people do all their summer road trips. So I think that bias, I think, was kind of playing in a little bit, thinking that maybe BP or the stock would see some tailwinds from that as well. But
Well, I actually think that that's a completely fair hypothesis, but yeah, if it were me, I would wait to see some
mhm.
of that actually happening
Do
before.
you Okay, that makes sense.
You
Do you have any other comments or thoughts on the methodology that I did? Any other things that you think I should look at in the screeners, or any other just general comments?
Um, there's a lot of different fundamental tools you can integrate into the analysis based on how you pick stocks. That's really what it comes down to, right?
Mm-hmm.
Is we're picking a stock that we like. So a lot of times I'll include things like either free cash flow, revenue, sales per share, just like a typical fundamental analysis overview,
Okay.
because that is important against the longer term portion of the hypothesis. And it's important to know that when we're trading something like this, if it's not in an index or a sector ETF, but in individual stocks like this one is, if the entire hypothesis is, you're expecting maybe a 3-year trade, well, revenue growth makes up for a significant, it's like 50% of stock performance in a 3-year period, revenue growth. And
Okay.
then margin and multiple are both like 20%. If
Interesting.
you look at like a 1-year hypothesis, something like the earnings multiple is like 46%. So based on the time frame that I'm looking to place the trade against, like the long-term hypothesis, my fundamental tools are going to change a bit based on those exact kind of details that I just shared.
Okay, that makes sense.
So
All
I
right.
think
Well.
integrating some of that is good.
Mm-hmm.
And then the last thing is I typically look for stuff that has weeklies. So that's normally just an overlay scan that I include in the screener. And it's
Mm-hmm.
because stuff that has weeklies tends to be more liquid already. Otherwise, they wouldn't even bother adding
That
weeklies. That's
makes
not to
a
say they're
lot of
all liquid.
sense.
They're not. Yeah, a lot of them
Right.
are bad. But it's just an easy way to screen out the stuff that immediately doesn't, hit our thresholds.
Yeah, because there's nothing more frustrating, I think, than looking at finding a stock that meets all your criteria and then finding out that the options are shit. And then there's like a
Exactly.
$1.20 bid ask spread on it. Like, fuck, I
Yep.
wanted that one.
Exactly. And that is exactly why I always start with kind of an efficient scan where I'm adding the most important thresholds, but the easiest to meet thresholds first.
Mm-hmm.
And then I'm getting very discerning after that.
That makes sense. All right. Anything else I can look at to further my education on these some of these topics that you brought up?
Yeah, I mean, I have literally a whole playlist on the cover strangle. So, and I know that you've been poking around there, which is good. And then the other thing I think might be useful is if you pull up like the active trade management playlist and you just get an idea for some of the other scans that I like to use. But I mean, I think you're on it. I think now what it just comes down to is placing a bunch of them. Like if I were in your shoes, I wouldn't have just placed that one in the paper account. I would set up like 10 different paper accounts, each of 10K, and I would trade all of them.
Ah,
Because you get to create a great data set with live information. You get a much better bang for your buck in time that way.
yeah. The problem was I didn't find any other ones that I really liked at the time. I figured it was better to
Yeah, and
exercise discretion and try to. I wanted to stick to the parameters that you mentioned in the videos. Like I didn't want to compromise
yeah,
on a dividend or a stock that I want to own long term, like those kinds of things. And there's not much that I really want to own long term right now.
yeah, which that also brings another point because those are easy variables to adjust. Instead of
Mm-hmm.
thinking of a 3-year hypothesis, you could think of a 6-month hypothesis
Mm.
and adjust the analysis off of that.
Oh,
Or
okay.
yeah, instead of caring more about the dividend, you could always care more about the stock growth
Right.
and change your parameters based on that. So that version of the covered strangle that I talk about in those videos, that's kind of like the base approach that I take, but there's so much nuance that's important to integrate into the near term stock market environment. That's actually why a lot of the stuff I trade now is in a much shorter term time frame,
Mm-hmm.
is because we're in a very movement based whipsawy market.
Right.
So I want to remain sensitive. I'm not trading the same 45 DTE short puts in my coverage strangles. Most of them are less than 20 days right now.
Right.
And it's just the name of staying sensitive to the current market conditions. So I would also encourage you to tinker with different priorities for the long equity side of it.
Mm-hmm.
And again, just put on a bunch of them. Even if it's shit that you don't love, put it on anyways and just
Yeah.
see how it does and be very clear when you're tracking that trade. Like, I didn't like this trade because of these reasons. This is still the best way I think I could set it up. And I would literally write that in notes in the Excel sheet
Right.
and then track the motherfucker, see how it does.
I love it. All right. Anything else to add before we wrap up here for the day?
No, sir.
All right. Well, that is going to bring us to the end of the episode. Thank you to everyone who stuck around to the end. Thanks, Erik, for all the great knowledge that you shared today.
Yeah, man. Thank me.
Yeah, I think you earned it. Now, if you'd like to know more about how he trades, make sure you check out his YouTube channel at ESInvest. You can check us out at twobullsinachinashop.com. Be back soon with another exciting episode to blast into your ear holes. But until then, seduce that 5-star rating like you're Elon Musk hiring a new CEO and take care.
So good. So good. Proud of that one.
Yeah, I thought that was pretty good.
Yeah, that was a really good one. Nice job.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.